to scalp, and we love volatility, but we can't, and we'd love to trade volatility, but we cannot create it. So consequently, we're at the mercy of everyday lack or more volatility. Yesterday in the morning, we were very busy. It was very nice to kind of have an opportunity to trade and focus on trading, and me talking about trading instead of me talking about talking. And so we had a lot of good opportunities to trade. We had to work some orders. I mean, sometimes the market did not give us the trades that we were looking for. So consequently, we had to work around it. Hopefully, we were working them with you. And but the point here of any of these levels that we give out, plus any other price action opportunities, is for you as a trader, independent trader, to find those levels on your own and to be able to take advantage of them when they are able to trade them, and we can trade them accordingly. So again, how you trade them is an individualized thing, because everybody trades a little bit differently here, right? I mean, let's be understanding of that. Now let's give you our levels again. Our pivot this morning is 41, support at 35, 29, 24, and 15. Resistance on the upside at 46, 53, 58, and 64. All right. So again, everybody trades a little bit. How you enter a trade, how you scale in, if you are scaling in with multiple contracts, how you exit trades is an independent thing based on each individual's trading preference, right? I mean, I would love to say that everybody trades the same, but I can honestly tell you they don't. And it's a good thing, because that gives everybody here an opportunity to trade, independent of one another, and to be able to trade according to your risk tolerances versus anybody else's. We don't want to be trading somebody else's risk tolerance. That doesn't make any sense. So everybody here trades differently, and everybody here has different risk tolerances. How many contracts you trade, how you get in, how you get out. Those are all individualized things which we help to try to work with each person here so that we can maximize your profit potential. All right. Market is kind of just floating around here a little bit. Basically, you can see we've been range bound here for last few hours, so nothing to get too excited about. I still can't imagine, I disbelieve actually, that the bond market is where it's at, given the fundamentals that are been thrown into it, and the talk and the concern, and it's just amazing to me where the bond market is right now, given all the other fundamentals that are supposed to be affecting it. As we are slowly drifting up here to our 46 area. A good trade there, Robert C. Now remember, we say an area because we are not perfect. But if you're trading one lots and you're just trading a level, then maybe you just trade that one level. If you're trading multiple contracts, you're scaling in. How you scale in is all dependent on your risk tolerance, right? I mean, everybody's got different risk tolerances. So that is an individualized thing for sure as we come up here to our pivot area. Yeah, again, we scale in, so you're depending on each individualized risk tolerance, how you trade around it is what we're trying to do here. So again, we're coming up here to the 46 area, trying to see what it wants to do. And again, keep it. We're looking for about 2 or 3 point profit targets, and we're also kind of doing the same as far as our risk tolerances are concerned. So that's what we're trying to work around here. And again, make sure you keep your stops in place because we never know when the dynamics of the market are going to change. The levels that we give out are basically a guide to the day. They are there to help us focus in on areas of trade when we reach it, keeps us out of trouble when the market gets to, gets range bound. And so these concepts that we talk about and we trade are there for us to make sure that we stay out of trouble, but we also are focusing on levels that we believe that will give us an opportunity to, the market will give us a chance to scalp. Now, we're not going to be perfect, obviously, so that's why we always talk about keeping your stops in place. And once you get stopped out, looking for the next opportunity. And if not, then we just look for the next profit level that we're looking at, or next trade that we're looking at. And again, we're all dependent on volatility here, right? Sometimes we're going to get a lot of trades going, and other times we're not going to be so lucky. But hey, it is what it is. Obviously, we'll come up here, kind of work in this 46 area here. Again, make sure you keep your stops in place. Again, we are talking about areas, right? So it depends on each individual's risk tolerance as far as exact entry points. Some people scale in around a level. Some people take the level straight up. So let's just say, for discussion's sake, we're taking the level straight up here at 46. So that's where your entry point would be as a short. So, but everybody trades the scales in differently. Remember, we're trading an area, not exact level, because it just doesn't work that way. And so, but if you're trading the 46 and you're only trading one lot, let's say you're getting short here against the 46 area. So that's the easiest way to keep that. Sometimes we're not going to get to 46 and we're going to get to 45 and change, right? So then it depends on how you scale into that area. So, but you get the idea, right? Because people trade multiple contracts, everybody trades differently. I'm going to give you a level, and the level is an area, and then how you get how you get into that area, how you trade around it is up to an individualized basis. So right now, if we're just trading one lot and you're trading the 46 level, you got filled, and our stop would be about 48, 49 area. And then you'll look for the next level. If we get up there, profit target would be down at the 44, if that's what you're just straight without too much fanfare. With just trading, just a little bit. Bond market. I mean, I just can't believe the bond market is where it's at. I just can't believe it. Just trying to comprehend how it's up here. The levels, our pivot this morning is 41. Resistance at 46, which is where we're working. 53. 58, 64, support below at 35, 29, 24, and 15. Let's see if there's any numbers coming out this morning. No, the FOMC minutes are going to be released at 1 o'clock Chicago time. So the FOMC minutes, which are the discussion, a written discussion of what they discussed at the last FOMC meeting, will be discussed, talked about at 1 o'clock. So that is going to be something that the people are going to be looking at if you're going to be trading late in the afternoon at 1 o'clock Chicago time. That is where the market's going to be focused in on a little bit, as far as trying to figure out what the Fed's plans are, right? And again, the yield on the yield on the 10-year is down to 134. I mean, with all the talk of inflation, all the talk of raising rates, I mean, they are just, whoever is short that market is just getting bamboozled here. This is a classic short squeeze. If you're talking about short squeezes of all short squeezes, there it is. There's the classic short squeeze of all short squeeze there in the bond market. And just, I mean, the talk over the last 2 or 3 months was how the Fed is going, inflation's a factor, how it's going to be affecting the market, and look what they're doing to it. Just absolutely bamboozling everybody who's thought about maybe getting short in that market, which again, it's not inconceivable that somebody gets short there. I mean, we're right here at the 46, as you can see. So this market is giving you a choice here as to how to trade it. And we're finally getting a nice rotation here, taking some profits along the way. If you're trading multiple contracts, we're coming down here to the 44 area. Again, we just obtain a simple 2-point stop. You did not get filled on the upside, and you came down here and down to the 44. So our targets kind of were achieved here with our little trade, and hopefully you were able to take advantage of that level. Had to take a little bit of heat up there, but again, we did not get stopped out. If you just took a simple trade against the 46 and didn't scale in or didn't do anything fancy, you got a nice rotation and a nice 2-point. You even got 3 points right in here if you did that. So nice little trade there if you did get in against our first level of resistance up here at the 46. Again, we are just trying to find those levels of inflection that we believe with the adequate amount of stops that gives us a pretty much low risk. I mean, 100 points, $100 in a trade for a 1 lot on a 2-point stop. It's kind of not too bad. And if we can, multiply that by the number of contracts that you trade, and you can make a nice little trade there. So you don't need to trade that many contracts to be able to make a little bit of money here. But then again, you always got to consider, the stops if that happens. So it's not only just the profit thing, but it's also stops. But again, just that's how we kind of do our thing here. If you just found our levels straight up. Bond market did pop. Maybe again, I'm just like I said, I am fundamentally what the bond market is doing is just amazing and just unbelievable. I mean, literally. But this is trading. I mean, if you are trying to think of the fundamentals and take long-term positions, which is what we don't do, and we don't even profess to do, because it's not like what we like to do. We like to scalp. That is just what they're doing in the bond market for people is just for those people who are thinking they know what's going on. It's amazing. All right, let's see. So this is the problem. So they had this new IPO, Diddy, right? And the New York Stock Exchange, that came out just 3 days ago, and it's tied to China. And of course, that the China stocks are basically government run, most of them, right? Most of the companies. Details come out the lead up to the Diddy Global IPO on the New York Stock Exchange. The stock stumbled 20% yesterday to $12.49, just 3 sessions after the company went public, after China began a probe into the firm's data practices and barred new users from its app. Diddy is down another 4% pre-market this morning, leading many to question how much was known before the ride-hailing giant, which is like the Uber in China, raised $4.4 billion on a $67 billion valuation. Yeah, okay. Trading any China stocks could be just as fun as trading Bitcoin, right? I mean, at least in the United States, you have you know that there's a reason stocks go up or down. Obviously, you know, the government tries to stay out of situations, but China, they don't care. They're right in every company. So, and they probably have most of that stock. So, whatever. Wall Street banks, including Goldman Sachs, Morgan Stanley, JP Morgan, made about 2% on the total amount raised, or about $88 million when the spread out between them. You gotta love those guys, right? They make money no matter what. Language about the risks of doing business in China starts on page 7 of the IPO prospectus. While regulatory anti-monopoly warnings appear on page 11. While some say the disclaimers are enough, others expect a certain amount of deep expertise or specifics about the regulatory environment. The regulatory environment in with Chinese stocks is don't trade China stocks, but that's my own thing. I mean, Baba also is another, but that one made some money, but now it's getting into some deep stuff there too with the government. Now I'm not trading it again. No, I'm not going to get short again. I'll be actually looking forward to 53 level as our next resistance point. I mean, you could if you wanted to. I mean, you got to stop there above 48. If that's, I'm not telling you not to. I'm just saying that once a level is triggered, it becomes much more riskier the second or third time around. Well, we can't put the levels in the chat, so I'm going to give them verbally for you. Our pivot this morning is 41, 43, 41. Support at 35, 29, 24, and 15. Resistance on the upside at 46, 53, 58, and 64. All right. So again, if anybody has any questions, especially some of the new folks that are here, if you go to the chat box area and you ask any questions, you can just put them in there. I have that window up, so I'll see that. I'll see your question there. So we focus more on the morning hours here to help us with our opportunities to make money. As you can tell here, we got triggered here in our first level. I can't. We got triggered here with our first level. And I know it'd be a lot easier there and there, but Mark is not here, so I don't know how to save it and print it, because it just doesn't, for me, it doesn't work that way. It just doesn't work that way. So we got triggered here on our first level. We like to focus on the morning trade. It gives us good ebbs and flows, good bang for our money versus the late afternoon trade, which is a lot different, and doesn't flow as easily. The price action is a lot different in the late afternoon than it is in the morning. We got a new high by a tick there and completely sold off. Not a big surprise there. Thank you, Joel. If you look at the chat box, somebody's helping me out here. There you go. Thanks, I appreciate that. So yeah, that's where we're at with. So we're kind of hanging here. We got a little support back. Again, well, it could really do any. We could really go right by our pivot there and kind of float right down to 35, or we can hang here. But again, if you're a little aggressive, maybe a little support there at the 41 area. If not, just wait for the 35 on the downside. Next resistance on the upside is up to 53. So again, we will focus more on the morning hours. Good bang for our money. Good the dynamics in the morning are totally, I think, kind of go with our trading methodology. Not to say that in the late afternoon trade is not the same, or it's a little bit different because for a couple of reasons. One, there's less people trading. Two, there's less volume, and the ebbs and flows, especially as the day goes on and the volatility gets sucked out of the market, it gets a lot slower, and the ebbs and flows are not there as we like in the morning hours. So we kind of focus more on the morning hours to help us with our opportunities to trade. Saying that, the FOMC minutes that were going to be released later on this afternoon are definitely something you should not be trading, especially because you never know what they're going to say, and you never know how the market participants are going to react to any of that stuff. So it's a two-way street. It's not, you don't know what they're going to say, and then you don't know how the traders are going to react to it, because it's like ambiguous. It's got all kinds of goofiness in there that as traders we would want to say we understand it, but we don't. Just like I'm telling you that the bond market here doesn't make any sense, that we're at a 163 handle, and the yield, like I said earlier, on the bond on the 10-year is, this was as of this morning, I'm sure it's different now, is at 134. So, I mean, that's amazing. It's just amazing. So definitely later on this afternoon, I don't know about if you want to trade or not. It's got to be a lot careful, especially with FOMC's minutes going to be released. So again, like I said, we focus more on the morning hours. Kind of keeps us happy because we like to. It seems like there's good ebbs and flows at those times. The Nasdaq was the only major average to rise to fresh all-time highs on Tuesday after the S&P snapped a 7-day winning streak. Cyclical shares also pulled back, while big tech like Amazon shined bright. The trend continued overnight, with the Nasdaq rising 0.5% linked to the S&P's, and the Dow up 0.2 and 0.1. It is really the tech space that's been driving the market, said some analysts. Over the next few weeks and months, especially, we'll see the United States growth will hold up well and will continue to support markets. The next catalyst for stocks and bonds will be released at 1 o'clock today. The behind the doors discussions are expected to be dovish at the central bank, as the central bank remains concerned about inflation trends and continues to look for progress in the labor market. Any signals of bond tapering will also be watched, which could signal a retreat from the current easing policy. The minutes will also be a particular interest to the bull forces, which have taken control of the treasury markets. On Tuesday, the 10-year yield fell to the lowest level since February, while the 30-year tested at the closely watched 200-day moving average. At 134, the 10-year yield is now even closer to 1% than 2%. Boy, this guy's smart. Many analysts had forecasted for the end of the year are investors pricing a major risk from OPEC crisis? I don't know, which could see a price war induced oil slump weighed on inflation estimates and support bonds. I don't. That's not good. This guy's like guessing now. Now they're guessing. Oh, could it be? Could it be? Could it be though? Could it be? Okay, stop guessing. Like I said, it's amazing where we're at in that bond market. Just amazes me. All right, if you did trade our support level, our pivot area. You're getting paid off here a little bit, nothing great. Little support there. And I remember I said yesterday the bond market was maybe we're a little, I don't know, equities are concerned there, but yeah, we're just kind of holding here against our pivot. Again, if you did dip your toe in there, maybe you can pay it off here a little bit. Not much anymore, but we're looking at the 35 as the next good support level. Again, everybody's got different risk tolerances. So there's going to be some more folks that are going to be trading more, some going to be trading less. Everybody here has different risk tolerances. Welcome to some of the new folks that maybe have just showed up. We are trading mini S&Ps here. We're trying to take advantage of ebbs and flows of the market. If you look at your chat box area, Joel, if you can repeat those levels again for me, I'd really appreciate it if you know how. If not, don't worry about it. I'll repeat them. I will repeat the levels again that we gave out during the morning before the market opened, and we use those as a guide to the day for the day. And there they are. Thanks. There they are for you in the chat box. That's a kind of a guide for our trading day. Again, we use that as a guide. We can add to them, subtract from them, tweak them a little bit. There's nothing etched in stone in trading. You as an individual trader get to make changes based on your risk tolerance. And what we're here trying to do is maximize those risk tolerances. Those levels that we give out plus any price action opportunities gives us setups that we use during the course of the day and to give us a chance to trade. And how we come up with these levels and how those setups, what the setups are that we like to use are based on the work that we do or the methodology that we have in our trading education course. If anybody's interested in that, if you're new to the business or if you want to learn or add to your repertoire of trades, this is where we're at here. So welcome. And if you have any questions, if you go to the chat box area and write your questions in there or any comments, whatever you want, just go to the chat box area and put it in there. I've got that window up and I can see it quicker than if you put a Q&A section. You don't have to raise your hand, anything like that. Just put it in the chat box area. So all right, for those of you who might have bought our support there at the pivot, that you're getting paid off here is also our blue band, our blue banders, and their support and their pivot. So nice trade if you did. Maybe jump in and you get a nice rotation here off of that trade. Again, everybody's trades differently. Not everybody has to take that trade. Any trade that we talk about is based on you have to understand your risk tolerances and then trade it accordingly. So I suggest trades. Doesn't mean that everybody has to take them. Just means that they're out there and you have to find those trades that you can visualize, understand, appreciate, and then consequently trade. Right? So I can only suggest trades, but then we would like it that you can find those trades on your own. That's the objective here of the course, to be an independent trader. So that's what we're trying to do here. So you can independently find these opportunities. And if anybody has any questions, you can put them in the chat box area. Bond market continues to just stay strong. I mean, it does break a lot. There's a nice break there from the highs, and then comes right back. I mean, these moves that you're seeing in the bond market are not normal moves. I'll tell you that much, but they are amazing. Anyway, that's where we're at right now. So if anybody has any questions or comments, please feel free to ask or add or put them in the chat box area. I'd like to have questions. We're not moving as much today, as you can see. Things are a little bit slower than yesterday. Yesterday we were one opportunity after another after another. It's an opportunity. I mean, do we know it's going to work or not? Absolutely not. But we do know that it's an opportunity to trade. And then how you work that trade when you get there is up to you. And how you scale into it is up to you. How you trade around it is up to you. We are here to show you the opportunity, and then how to trade around it is an individualized thing. So when people ask me about, what's your record, this and that, it all depends on individual traders here. Some will scale in differently. Some will, have a 3-point stop more. It all depends on each individual and how they trade. And, but this is trading. All right. So, but we do have guidelines and rules for everybody. And what we're trying to do here is to make sure that you can maximize those opportunities independently, to understand your risk tolerance and then to trade it accordingly. As you can see here, it's kind of tough for me to talk about this because there's not much going on, right? I mean, I wish that we could. It's just kind of hanging here around our pivot, kind of trading sideways. This is, once we had the 41, which traded earlier, and now we're getting into this no trade zone, right? This is what I call the no trade zone, where it just goes trade sideways. But the next support level we have is down to 35. That's the next area of concern that I'm looking at. We were at 41 a little bit ago, but we got out of that. Now we're just kind of looking at the 35 as our next level. The upside resistance there at 46 worked very nicely for us. If you were with us earlier, you were able to maybe get short there and take advantage of that trade. And the market now continues to downtick here as the bonds are all-time highs again. Well, I don't know all time. That's not true. They are on their highs. And it's creating, I think, a little bit of I don't know. Yesterday, I want to say that, but then you saw what happened in the S&Ps. They kind of came all the way back. So the market continues to downtick. Next support level we have is down at the 35 area. It's an area, right? Remember that. It's an area. Let's continue to come down here a little bit. Anybody get filled down there at 5.5? And I got in at I got in at 36 as my upper end of my scale. If somebody got in at 5.5, then you're doing okay. So again, everybody scales differently, like I said. If you get scaled in at 36, then you obviously got filled there. Got down to 5.5 there, but I didn't have my order at 5.5. I had it at 36. So anybody get in there at 5.5? All right. As a market, nice rotation there. Again, how you scale in is an individualized thing. We talked about a point above and below a level, a half a point above and below. It all depends on each individual risk tolerance, and obviously that is something that you have to consider as a trader. And if we talked about scaling in up, it's an area. So how you scale in is, and we're not going to be perfect. I'm repeating myself only because, there's no reason to say that this 35 level didn't work, because we did get down to 5.5 and then pop back up. It all depends if you got in at 35, if you got in at 36, if you got in at 5.5. All of those are legitimate ways of getting into the trade besides 35 straight up. Now, because they get down to 5.5 and rotate up, we have to be a little bit careful here of the level, as it kind of technically did work. So we're going to go revisit it. I would maybe, if you didn't get in at 35, or 36, maybe take the lower end of that range instead. All right, so we dipped down right down to our 35 area and did pop back up again. We're not perfect. That's why we call it an area. So we got down to 35 and change. If you had 35 straight up, obviously you did not get filled. So be careful there if you're going to keep the level, only because it did bounce. We did have a nice bounce off of it. It becomes a little bit more risky. So you have to adjust there on your contracts if you're risk averse, and we did go down there and you don't like the price action now, especially because it's riskier, then I would cancel. If you want to keep the level, maybe adjust it a little bit lower, and your entry point gets in a little bit lower, maybe 34.5, 34 area. It's a lot more risky, but it's doable. You can maybe try that if you're a little bit more risk averse. Or if you're totally risk averse, just wait for the 29 on the downside. That'll be our next support level. So you do have options as traders, right? I mean, this is my point of all of this, is that as a trader here, you have options. There's not one rule here that says that you have to stay in a trade or not. The bond market just flushed down, flushed right back up, right? Amazing. Sorry, I'm infatuated with the bond market. I just am. I'm just trying to comprehend what is going on there. All right, we've come back up here to our pivot. Kind of quiet. We're just looking at our support and resistance levels in the S&Ps, not so much in the bond market. It's not bond market is just fundamentally. I'm looking at the bond market, just talking about it because of the well. First of all, I traded in the bond market when I was trading, so I'd like to keep it up there. Like to look at it. I think the bonds are eventually going to dictate what's going to happen, but now they're dictating it in a different way because of the fundamentals. We were a little while ago. They were so concerned about the bond market and interest rates and this and that, and that was causing a little influx in the S&Ps. But that's kind of disappeared here a little bit. So that's all. But as far as our levels in the S&Ps, they're not related to the bond market. So we are following the bond market. We are looking at the support and resistance levels that we have for our entry points. And that is true. And we gave those out earlier. Did you get them? Okay. So kind of use those as a guide. So our trading day. So in addition to those support and resistance levels, we also have price action opportunities that occur. And the price action opportunities we talk about when they happen, but they're also there for us to find setups to trade. So in addition to the support and resistance, there's also price action opportunities. So we did have the 35 level down below, which again, like I said earlier, is an area. And we got down to 35 and change there, and then nice rotation here off of that. And earlier we had resistance up there, 46 again, which also worked out as good, some good resistance. So those are the opportunities we've had this morning. And now we're just kind of floating right back in here into this range that we've been at for most of the morning here, right? I mean, going back to early morning hours. And kind of hanging around our pivot, both sides of our pivot. So very, very quiet. Nothing to get too excited about. Like I said earlier, we're at the mercy of volatility and or lack of. So, but we did kind of drift on both our levels here, so I guess we can't complain too much. The pivot is from the work that we do, what we're looking for, what the market kind of tells us. It's a little bit different than what the usual way of figuring out a pivot. Basically, I call it the pit pivot. is what excuse me, is what we used when we were on the floor, and it seems to work pretty well here for us. In real life is on the screen as well. So. Well, it's kind of a combination of a lot of things, yeah. So, and like I said earlier, it's kind of worked out well for us, taking some of the concepts that we've learned or to have taken off the floor and transformed them here onto screen trading or electronic trading or whatever you want to call this medium. Yeah, we're kind of here at our pivots, so very, very kind of quiet. Nothing to get too excited about right now, but we did get triggered on our upside resistance, and again, we didn't go down to 35 exactly, but we did get triggered down at our 35 area down below. So, and now we're just kind of hanging around our pivot. What I like to call this is the no trade zone. This could be it for today. We've got our top level, bottom level. I don't know. Yesterday, or at least we're moving around. So we had some fun yesterday. But today, bonds on their highs again. Maybe putting I want to say there's inverse trade, but there isn't. Obviously, because we're all the way back here. Basically, yesterday's opening range. Before we broke off. So I know we're at all newer highs in the S&P in the bond market. So it's not that. It's kind of hard to figure out one or the other. We're not trying to anyway. We're not trying to correlate one market with the other, at least not now. Sometimes it's a little easier to correlate bonds and equities, but at the moment it's not the case. All right. And like I said earlier, we are focused more on the morning hours to give us our opportunities to trade. And it can get a little quiet and the afternoon goes on. Yesterday was an exception to that rule, which was nice to see. But most of the time, it doesn't seem like that's the case. So, but again, every day is different and you just never know. Well,
I want to talk to the guy. They said that area is too dry where the plants are. We have to water
oh, okay.
the new stuff where the plants are. I have trouble positioning it so it hits it the right way.
Which plants? The
The
ones
new ones.
on the side, on the left side, or the right side?
Well, the ones by the front door.
The bushes or the other ones? The tree.
The tree and the plant.
Okay.
The purple plant. He said both of them because your grass is too dry. He goes, even though it rained a lot, Saturday and Sunday it's been so hot that it's so dry.
Okay, so what does he want us to do?
Water, but he said do the plants first. That's why I said those two look dead. He goes, they're not dead. He goes, they're so dry. They need more water.
Okay.
So, but I can't position. You're better at positioning it so it hits a few sides all at once.
Okay. So Alyssa sent them this.
List of questions. Listen, I compose a list of questions.
Okay. Okay, I will look at it. I just opened it. Are you happy with the answers?
Yeah. Yeah. I think you could have a talk with her now that she's calm.
Is she?
Yeah. I go, how's Jack? We're both very excited, happy. Well, like something else is going to happen, and we have to discuss. Like,
yeah, yeah. Are you? Did they leave?
What?
Did they leave? Are you going out today?
Yeah, maybe
Okay. Oops, forgot to turn my my mic off. Sorry about that. I got to I gotta water the plants now. That's what I gotta do. All right. Sorry about somebody should have yelled at Chad. You should have told me a little earlier. But hey, I'm at home. I'm in my basement. That's what happens. But I am a bit more. I'm usually careful about that. But sorry about that. All right. Let's save this now. Well, I guess I don't water mine enough. That's what I was told. All right, so we have broken down here a little bit. So again, if you're going to do the 35 area, you got to be, be a little bit careful. Maybe the lower end, if you're going to take it at all. All right, we're coming down here to our support area again. If you're going to do the lower end, do the lower end of the level here. If not, just cancel it because it's a little riskier. I totally get it. And we'll look for the 29 level below. Market continues to downtick. We're looking for the 29 level on the downside. That's our next support level. We explained the risk involved here with the 35 area. Our next support level we have is down at 29. Bonds on their highs. I don't know if bonds are, if we're correlating with S&P's inverse trade with bond market or not, but it seems like every time bonds, at least during the day, that the bonds made a new high, at least initially there's an inverse trade, but I wouldn't say that it holds to that the whole day long. That's the only thing, right? So that's why we don't look at it, but that's what's going on. So next support level we have is down at the 29 area. Now we're coming down here to the 29 area. All right, nice little rotation here. Again, we got in at, again, we're scaling in, right? So how you scale in is a totally individualized situation. We did get down to 9.5. Got a little bit of a pop back up, coming back down here. Now we're working the 29 area here. If you got in at the lower end there, you're getting a nice little rotation here off of that level. All right, again, getting a nice rotation there against our lower end entry point. Again, you got to take some profits here and then see if you have any left over, see if we can get a push higher. All right, Nice little trade there if you did get in against our 29 area. So again, we're looking for those areas of inflection that gives us an opportunity to scalp the market. And if you didn't get them before, you definitely got them now. So nice little trade there for you if you did jump in. Again, we're looking for those areas of opportunity that give us an opportunity to scalp the market. I didn't really take that much heat on that trade. It was a nice little trade. Just had to be a little bit patient with it. Again, depending on how many contracts you're trading, how you can scale out. I talked about maybe taking some profits if you got in at the lower end of the range. Lower end meaning the scale, right? And then now if you have any extras, you're trying to see if we can get up to the 34 areas where I would be targeting here. Any longs that we have with a trailing stop. All right, if we had a trailing stop there, you're probably out. So now we're kind of flat. And the next level on the downside we have is down at the 24. Market a little bit weak here as we're looking at the 25 area, next support level. And we're just trying to take advantage of ebbs and flows of the market. 2 3 point stop with the same amount of profit target using our levels that we gave out this morning. And again, it'll continue to downtick here as we come down here to our 24 area. I'm sorry. Let me give you some levels here below 15. So we have 24, and then 15, and then I have 06, 42.99, and 91. Below the 15, I got 06, 42.99, and then 01. Thanks there, Joel. As we're coming down here to the 24 area. All right, working the 24 here. Remember, keep your stops in place, right? Bonds on there. Remember, it could not be the bond market that's creating the volatility. It could be other issues as well. And kind of, again, if you get stopped out here, that's fine. We'll look for our next level down below is down all the way down to 15. Could we have gotten short anywhere? Kind of tough to say anywhere like anything like that. Only if you got short against the upper level there at the 41 area. But not really. No, we could have never guessed that this was going to break down. Again, our 29 worked very well. Right now, resistance would be all the way back at the 34 area. All right, we got down to 20 and change here. And a nice rotation here off of that 20 down tick. Obviously, again, if you took the 24, probably got stopped out, which is understandable. And if you didn't, then you're doing a very nice job here of hanging in there with it and getting paid off here very nicely. Is that possible? Yes. If you're, it depends on each individual. Doesn't mean that it's doable. Depends how people trade. But if you're following, if you're keeping your stops in place, then you probably got out. And we were looking at down at 15 as our next support level. Right now, we got a little bit of resistance around the 34, 35 area. If we get back up there, again, kind of moving around really quick. That's it's not bad. This is what we need. We need volatility, but it only happens when the markets go down. If you notice, volatility occurs mostly when markets go to the downside. The slow rallies are just tough to trade. We might not make money on every trade that we are going to take, but at least we got opportunity. Sometimes that's good, sometimes it's bad, but as long as you stay focused, keep your stops in place, you're not going to get hurt that bad, and you're always going to look for a next opportunity when the market presents itself. So that's kind of what we're trying to do here. And, it is what it is. And again, if we got stopped out, good discipline, nothing wrong with that at all. You don't want to let a trade turn into like this huge loss, and you just never know when the market's going to be coming back. Okay, so nothing wrong with that. Anybody has any questions, please feel free to put them in the chat box area as we're coming here to the end of our morning session. We'd like to focus more on the morning. The afternoon trade gets a little bit more stickier. The volatility isn't the same. The movement isn't quite the same. Doesn't bode well for what we're trying to do with our methodology. So we focus more on morning hours to give us our opportunities. I think we've had some good opportunities this morning, even though we might have got stopped out on our last 24 area. But our levels that we gave out this morning seem to have worked out well for us overall.
Hey, a couple quick programming notes. For those that are coming in as guests, if you want to come back, I'm going to send you out an opportunity to sign up for $100. If you have any questions about trading software, let us know. If you have questions about Sol's mentoring and his coursework, let us know. This is an opportunity to learn how to trade the S&P 500 E-mini and look to develop consistent profitability based on a particular trading methodology that Sol has developed over the last 25 years or so. Hey, Andreas, welcome. Let us know what you're thinking. Hey, Chad, how are you? Hey, Anupam, Adam. Hey, Christine, how are you making out? Gabriella. Joel V, how are you? Thank you for posting that. Hey, Johnny Z, JP, Julio, KG, hey, Kevin D, KP, Kurt, hey, Mac, Peter O, hey, Sands, how are you? Steve P, Sevd, hey, Tim, Vince, and Warren. So I just sent out to everybody the opportunity to sign up. It's usually $379. Right now it's on for $100, so take advantage of it. If you'd like a trading consultation, let us know back in chat. Just make sure you sign up for friends and family. And if you are looking to have somebody teach you and work with you directly on your trading, let us know also, and we can set up a time again for a trading consultation and the opportunity to get signed up and involved in Sol's mentoring service. There's a lot that goes on here, both publicly and privately. Publicly, as you hear Sol's voice, and what goes on in the background privately amongst his monthlies, those that are part of the service on a monthly basis, and those that are part of his course and his mentoring work. So I'll be in the background if you need me. We do know who signs up and who doesn't, so take a moment. Take advantage of the opportunity. Usually it's $379 a month. Right now it's on discount to $100 a month, which saves you $279 a month, which is a real gimme. So if you haven't received the opportunity to sign up, raise your hand and we'll send it out to you privately. Thank you.
So yes, the methodology can be linked to other markets as well. It's more on a technical analysis perspective. So you can take some of the concepts and ideas that we implement here in the S&Ps and take them to other markets as well. So it's not just just one market. We focus in on one market because we understand the dynamics. We understand when fundamentals are being released. Try to understand some of the concepts that affect it. Like we talked about interest rates and so on. But that's our thing. I feel it's sometimes if we have too many markets that we're looking at, it kind of distracts from what you're doing. But yeah, you can take concepts and ideas in our market and use them in others as well. All right. All right. Again, coming here to the end of the morning session, the market nicely rotated back up here. And like I said, probably have the resistance around 34, 35 area. And kind of go through that, probably go back up to our pivot. But keep your stops in place no matter what. This was the 24 area was a perfect example of that. You just never know when it's going to stop, and take your loss along the way. And then, like I said, but we did well with the other levels, so it is part of the game. All right. If anybody has any questions, again, put them in the chat box area. We'll get back here in a bit.
Hey, a couple questions popped up about Sol Services. Sol is a 25-year veteran trader. He's been scalping the market, focused on the S&P for a pretty long time, and he has developed a trading strategy, a price action trading strategy that he is using or looking to use on a daily basis. You're connecting right to his trading computer. He's projecting out his charts to you, and he is going about his trading business during the morning session from 9 a.m. till about 12 noon. So from 9 a.m. to 12 noon are the times based on this service. If you haven't banked your money for this morning session, then make sure you reach out to us to have a trading consultation so that we can work with you, understand where you are based on your trading, and see if there's something here for you based on your development of consistent profitability. Trading is pretty easy to do, but it's pretty hard to make money on a consistent basis. So if you're one of those individuals that are looking to really focus in and do this as a serious hobby or as a business, then getting the help you need is the way to go. So, Andreas, you had asked a couple great questions before. Are you looking for trading education? So I sent out before an opportunity at a discount to be part of Sol's friends and family. I'm going to send that out to you directly now so that you can be part of it. After that, we can set up a time and talk, and you can join us on a daily basis here. Andreas, that's out to you now. Let me know if you got it. Christine, do you have any follow-up questions? I know we spoke briefly yesterday, or chatted briefly yesterday. Gabriella, let me know what you're thinking. Joel, thanks for posting that stuff earlier. Hey, Johnny Z. Hey, JPP, welcome aboard. Hey, Julio. KG. Kevin D. Kevin, did you get a chance to sign up for Sol's friends and family? Kevin D. Hey, KP. Kurt. Mac. Hey, Peter O. Hey, Sands. Sevd. Timothy V. Hey, Vince, welcome. Hey, Vince, let us know if you have any questions. Hey, Warren. Hey, Christine. So usually it's $379 a month. Right now it's discounted $279 a month. If you happen to get the rate based on this link, then it's permanent. As long as you keep it. So I can send that out to you so you have it. So now, when individuals sign up for this, you're signing up through PayPal. So you have control over keeping it, canceling it, based on, your interests. You don't have to contact us to change it, and it will roll over at the discounted rate based on this link. So that's why I'm sending it out so you can take advantage of it. Hey, Vince S., let us know what you're trading. Hey, Sevd. Hopefully I'm pronouncing that correctly. Just call you SK. But anyway, SK, what? I'm not sure we got a sound check from you earlier. Just let me know back. Hey, Mac, you were in before, right? Just let me know back in chat, Mac. Kevin D, let me know what you're doing. JP, let me know how we can help you. Gabriella, same. Chad B, I think you're getting some mail. I'm not sure if it's going to the right email. Just make sure you check it. I know you had 2 emails. I think this is the one that goes elsewhere.
Thanks, everyone.
So the opportunities here are guest, monthly member, and then the opportunity to have your trading consultation, and then decide if you want to stay monthly, which you're more than welcome to do, or you would like to be part of Sol's course and his mentoring work. One of the things that I would note that the course and mentoring work lasts for a year. In other words, it's a live opportunity for you where you are able to interact with Sol, not only learn, I call it the poem, right? Learn the ins and outs of Sol's price action trading methodology. Then as you apply it, you have the opportunity to be adjusted and tweaked by Sol over a significant period of time. If you do make the transition from monthly to Sol's mentoring service, then the monthly is free. So not only do you get a discount, but you have the opportunity to be part of it long term. You know, after the year, we do require you to go back and pay whatever the rate is at the time. But that's a year from now, so no worries. And the concept here is, how do you make money? You know, what's the point of this all from an educational point of view? You know, you're supposed to be able to be in a situation where you can afford to pay for things. And again, if there are those that are part of Sol's Monthly and you would like to have your trading consultation and hear about Sol's course and his mentoring work,